Hi there, you're watching Your Trades on ET Now. I am Snehisha. With me is Ankita Saxena. And this is a show where we're rounding up the trading day that we've seen today and bring on board an expert to talk about what we can expect in tomorrow's trading session as well. To begin with, let's talk about what the market move has been like today. Nifty has done pretty well, surprisingly, in today's trade, because for the first half of the trading day, we were struggling to break past the 23,300 mark, but we have ended even above the 23,400 mark. So it's been a very smart uptick coming in for the Nifty today. Almost at the day's highest point is where we've ended, just a few points lower than that. A 0.5% uptick coming in, and 23,437 is where we've ended for the day. 108-point uptick coming in on an intraday basis. Let's pull up the Sensex as well, because smart moves were seen on Sensex as well, and 0.4% uptick coming in, slightly off the day's highest point, but no complaints because the 300-point rally is what we have seen on the Sensex even today. Nifty Bank was the outperformer in today's trading session. You had the names like IndusInd Bank, Axis Bank, ICICI Bank as well that were, that were contributing to the gains seen on Nifty Bank. Nifty Bank has done pretty well. IndusInd Bank up 7% on the back of the news flow that their external audit report is estimating the impact of the derivatives mismatch. That impact on the books is lesser than what the company had initially estimated. So that is looking good for the company, and that's the reason why 7% uptick on IndusInd Bank. You have both Axis and ICICI Bank that have cut their deposit, their savings, interest rates on savings. So that is also something that's looking good. But well, Ankita, what stood out to you in today's trade?
Absolutely, Snehi, as you mentioned, Nifty, just look at the moves that came in this last hour of the trade. In fact, it was a very choppy day on the Nifty, but the kind of recovery that we have seen coming in fact, it has crossed over its resistance level of 23,400. That's where the main resistance was for the last two sessions, but we have managed to cross that as well. Banks were, like Snehi mentioned, was leading from the front. But besides that, a couple of other mentions here. If you look at the PSBs, the energy pack, that was shining in trade, but the auto and the pharma pack were the laggards. They were lagging behind in trade today. But a couple of other names that were doing pretty well. IndusInd Bank, of course, a special mention, because that was the one name that was leading the banking pack from the front on the back of the derivative discrepancy relief coming in, because earlier on it was penciled in that probably a 2.27% of impact would come in on the business, but now that number has come down, according to an audit that happened on IndusInd Bank, and on the back of that, IndusInd Bank was buzzing away in trade. Besides that, we also have HDFC Life, Infosys and Jio Finance that are going to be in focus on the back of their quarter four earnings that are likely to come out. Besides that, we also had the GCDs in focus today. IGL, there was Indraprasth Gas, there was MGL that was in focus today on the back of the APM gas allocation cut by 15 to 29%. So these names were also in focus today. And besides that, we also had the big news coming in on tariff that China is now open to talks with Trump, provided Trump shows some respect. So at least now the discussion is open from China's end. The discussion is back on the table. So that's the big news that's coming in as far as tariffs are concerned. But let's go across to our guest Amar Singh, who's now joining in, Senior Vice President, Research, Angel One. Hi Amar, thank you so much for joining in. Amar, what a move coming in on Nifty in the last 1 hour. I mean, we were trading at the day's lowest point when we managed to post that solid recovery coming in. In fact, we managed to cross the 100 DMA on Nifty above those 23,400 levels. We have breached those levels now. From here on, do you see that steam to continue on Nifty? What are the levels? Nifty Bank, a continuous outperformance coming in. What are the levels to watch out for Nifty on Nifty Bank?
Yeah, very good afternoon, and thank you for having me. So, definitely we've seen some very strong moves coming both on the benchmark indices, both Nifty and Bank Nifty, and it has been primarily the Bank Nifty which has witnessed a sharp rally. And also, if you look at the structure of Bank Nifty, Bank Nifty has been far stronger as compared to Nifty. And what we are seeing is that Bank Nifty is not very far off from its all-time highs, because currently it's around 53,100, 117 odd levels, and its all-time high was around 54,467. So roughly it's around 1,300 points only from its all-time highs. Whereas if you look at Nifty is still almost 3,000 points lower from its all-time highs. So that clearly shows that it's the banks which have been performing well. And if you look at the banks also, be it Kotak Mahindra Bank, to a certain extent HDFC, ICICI, PSU banks, and also, as we said, we've seen some pullback in IndusInd Bank as well. So banking space has been, I would say, quite positive. And also, we had the recent RBI policy wherein there was a rate cut was there. And also there are, wherein the RBI also made the statement of from neutral to becoming accommodative. So I think these are positive indications and positive directions for the banking space. That's what is clearly reflected in Bank Nifty. Looking at the levels, I would say the way Bank Nifty has managed to rally over the last few days, it could easily reach its all-time highs, which is somewhere around 54,400, 450. So any pullback is an opportunity, buying opportunity in Bank Nifty. If I compare both Nifty, Bank Nifty is anytime stronger. Looking at Nifty, if I look at Nifty, Nifty's Nifty on the weekly charts, which is the intermediate term trend, it is trying to move up. Some of the indicators have turned positive on the weekly, but still we are in the midweek. We've got 2 more days to go. So for any meaningful rally on the upside, Nifty would have to sustain above the 23,500 to 600. That's going to act as the immediate zone of resistance. Sustaining above that level, then Nifty is likely to move towards the 24,000 mark. As far as support for Nifty is concerned, we see that strong support for Nifty somewhere around the 23,000 levels, or 23,000, 23,100 level. So any pullback is a buying opportunity, but but Nifty is not as strong as Bank Nifty.
All right, Amar, then before we let you go, tell us any long calls coming in from your end. I mean, given that the market seems to be in a good shape, any buy calls coming from your end?
Yeah, the first is from the telecom space, and that is Bharti Airtel. This is one stock, if you look at, despite the market witnessing such a sharp correction, the stock is trading at record highs. So that itself speaks volumes about the stock. And also what has happened is the stock did go in for consolidation for quite some time between 1800 and 1600. It's breached that 1800 level. So this is one stock one can buy at the current levels with a stop loss of 1780 and a target of 1884 on the upside. So this is the first stock, and the second is from the financial space, and that is HDFC Life. What we are seeing in HDFC Life is that HDFC Life also went in for quite a bit of consolidation between 600 and 700 levels. It has breached the 700 mark. What we are seeing is that the volumes are significantly higher. So this is one stock one can look at, looking positive on the charts as well. So buying at the current levels with a stop loss below 700 levels and a target of 741 on the upside. So this is a second stock one can keep a close watch on.
So much for joining us and sharing your market outlook and your picks with us. On that note, we'll let you go. But viewers, time now to draw some attention to the flash on the bottom of your screen. You have Wipro's Q4 FY25 numbers that have just come out. Let's take a look at what the first cut looks like. IT services revenue has come in at 22,445 crores compared to 22,285 crores, which is an uptick of 0.7% on a sequential basis. Net profit has come in at 3,588 crores this quarter compared to 3,367, up 6.6% on a sequential basis. Now this number at 3,588, we were expecting this number to come at 3,290, so clear beat on the PAT front compared to what we were expecting here at ET. Now Q4 margin has come in at 17.5%, flat on a sequential basis, but 1.1% higher on a year-on-year basis. So 17.5%, we were expecting this number to come in at 17.3. So largely in line to a little bit of a beat is what we are seeing on the margin right now. Let's take a look at the other metrics that we now have from the press release. Net income for the quarter has come in at $417.8 million, which is an uptick of 6.4% on a sequential basis. Voluntary attrition has come in at 15% on a trailing 12-month basis. And in terms of the outlook, the company has said that they expect revenue from their IT services business segment to be in the range of $2,505 million to $2,557 million. This translates to a sequential guidance of anywhere between -3.5 to -1.5% in constant currency terms. Let's also talk about their deal bookings. The large deal bookings have grown 48.5% year on year in Q4, and margin also largely in line with what we were expecting. Voluntary attrition, like I said, has come in at 15% versus 15.3% on a trailing 12-month basis. It means it's a slight bit of a cut coming in voluntary attrition. But that's very nominal on that front. That's largely the first cut that we are seeing when it comes to Wipro's quarter 4 numbers. Let's welcome on board the guest that we have. Okay, we'll bring analysts soon on board to discuss what Wipro's quarter 4 numbers look like. But overall, it seems like there's been a there's beat on the PAT. Margins are looking in line. For revenue, we'll bring you the scorecard quite soon. But well, yes, that's the first cut coming in on Wipro's quarter 4 numbers.
All right, that's the first cut of Wipro's quarter 4 numbers. Largely inline set of numbers coming in as far as Wipro is concerned. We will get you an IT analyst to weigh in on the numbers. But let's go across now and get you some more updates on the market. Well, the SIP flow has remained intact even if there is a temporary slowdown. That's the word coming in from A. Balasubramaniam of ABSL AMC, as he notes that unique investors have doubled in just a few years. He adds that they have seen net inflows across all categories of funds. Let's go across and look at his take.
The gross number, which is generally the trend of investors. The gross numbers registrations continues to be on the rise. Therefore, SIP cancellation is actually the function of the market, but it also doesn't take much time to come back. Because SIP is something people have now understood the power of saving. In fact, those who have remained invested through the entire period of volatility, they would have got the significant benefit of the SIP you have investing in the mutual fund space. We have about 5.29 or 5.3 crores unique customer that we have. Okay. The same number, just about 3 years back, it was just about 2 crores.
Yeah, it's doubled. Been growing. It's doubled.
I think what is most important for Indian mutual fund industry is that's why I keep saying all the time that I think the landscape completely got changed from a server's point of view to invest in mutual funds now by way of SIP now become the reality. I've seen inflows coming in large cap, flexi cap, multi-asset allocation fund. We've also seen inflows coming in the hybrid funds. Hybrid funds have been getting a lot of inflows. Even fixed income funds. Some of the fixed income funds, people on the base of expectation of a rate cut, and a lot of people have started coming into the fixed income funds. My own belief is as we move forward, even the liquid fund will start getting flows, given the fact that the rate in savings bank account rates are being now cut to about 2.5 to 3%, and liquid funds would rate about 6 to 7% on an average, roughly. That's investing in about 90 days money market instruments. I'll also see participation coming even in the liquid fund as part of their parking of their money in the mutual funds. Therefore, if you look at in the equity space, we are seeing across all categories, including small and mid cap, though the noise levels on small and mid cap could be more not favorable kind of thing, not negative I would say, not favorable, but still flows in small and mid cap also start coming in, given the fact that one, asset allocation plays a role, and SIPs come for a longer term, it's for a perpetual, and that's something we have understood. And people also understood conservative investors can actually choose the hybrid funds. Hybrid fund also has seen decent amount of growth.
Word coming in from A. Balasubramaniam, who joined us in the studio earlier today. And let's move on from that and talk about a space that was seen largely in the red today. Big cuts coming in on names like MGL and IGL and these city gas distribution companies. They've disclosed another reduction in their allocation of domestic produced APM natural gas, which could hurt their profitability going ahead. Varun joins us with the details of why these stocks are under so much pressure in today's trade. Varun.
Well, so the APM gas allocation for the city gas distribution companies have been reduced by around 15 to 20% for MGL, IGL and Adani Total Gas. Now, companies say that this will impact their profitability in the near term. Antique has come out with a note on all these companies. They have a hold on MGL, hold on Gujarat Gas and a sell call on IGL. Now they say that the CNG segment's APM allocation will actually fall to 38% for IGL and MGL, and it will fall to 34% for Gujarat Gas from the current 48 to 51%. Also they say that the deallocation will impact the CNG gross margins by 90 paise to 1 rupees per SCM for MGL, IGL and also Gujarat Gas, in fact for all the city gas distribution companies. Although they have been allocated 25% additional new gas now against the reduced APM. So this will partly, offset the impact by around 15 to 25 paise per SCM on the overall EBITDA. And also, even after cutting the APM allocation, they expect the margins of this city gas distribution companies to improve in the Q1 of 2026 because of the reduced crude oil prices, and also a few months ago these companies have taken price hikes in CNG and PNG that will help the margins going forward. The main point of concern for them is actually the CNG price advantage that these companies currently have. They say if going ahead the oil marketing companies reduce the price of petrol and diesel, then this will have an impact on the overall price advantage that the CNG, that the city gas distribution companies currently have. And going ahead, these companies are actually going to focus on volume more rather than margins. Although the AP deallocation will always remain an overhang on these companies, but they also say that this deallocation will actually help ONGC because there is a shift from APM gas to new well gas, and this will help ONGC in overall EBITDA by around 500 crores. So it's a loss for the city gas distribution companies, but yes, it's a profit for ONGC as well.
Okay, well, thanks Varun for joining us for that. But we also have Mayuresh is joining us on the show to make sense of the Wipro numbers that we've just seen coming out. And Mayuresh, thanks so much for joining us, and also help us with your first cut on Wipro's numbers, because largely from what we're seeing, dollar revenue seems to be in line. A slight bit of a beat coming in on the PAT, and margins at 17.5%, same as the previous quarter, so sequentially flat, but no downtick on that front. So what is your first cut, and what are you making of Wipro's numbers?
No, so hi, afternoon. Thanks for having me. So largely, I think in line with expectations, the EBIT margins have come in a little bit softer than what the street probably believed in. Again, if you probably look at the sectoral allocation, the impact in terms of discretionary spends being deferred might actually start playing out as well in Wipro's case. And therefore, I think management commentary in this aspect is going to be extremely important. I've not been able to find out whether they've tweaked any kind of a revenue guidance for the next quarter itself. But expectations in terms of a -1% to 1% kind of a range is something that the street probably believed in. If that probably happens, my own sense is that the expectations in terms of weak discretionary spending along with a weak margin trajectory, it might actually not bode well in terms of how the future numbers might stack up. So I think it really depends in terms of the management take now, in terms of the environment that they're probably looking at, the landscape in terms of orders, pricing, etc., which will largely determine how the stock will probably behave going forward.
Mayuresh, hi, this is Ankita also joining in. Mayuresh, so the one thing that's really standing out right now, as I can see, the FY25 closed in with 2 mega deal wins, an increase in a large deal bookings. Do you expect this to sustain given the subdued demand environment globally, especially the slowdown in the discretionary spends due to the global macros that are really playing out? Do you think that could sustain going forward?
So I think that's the million-dollar question, right? Whether discretionary spending will hold up or not, specifically in key areas like BFSI, retail, manufacturing. And therefore, I think how these tariff walls will play out in terms of the macros as far as the US is concerned, and specifically in terms of the key sectors that we are just discussing, is going to be extremely pertinent as we speak. Again, a large part is, I think a large pool of expectations are probably penciling in a late recovery probably happening, or recovery happening with a lag, and probably the next couple of quarters being a little bit tough as far as decision making is concerned. So I think we really need to see how the macros play out and the management take on this going forward.
Thanks so much for joining us with your quick take on Wipro's quarter 4 numbers. On that note, we'll let you go, and with that, we'll wrap it up on this edition of Your Trades. Thanks so much for watching.